Continuing with our review here, we're in chapter 15 for equity, and this is question number 7 that has to do with how to compute your equity, your treasury stock. We're going to figure out how do you compute outstanding equity here. So with this question, during 2013, the following transactions occurred relating to stockholder equity. They reacquired 3,000 shares at 28, reacquired 3,000 shares at 35, and then 1,800 shares of treasury stock were sold at 30 a share. So for year ended December 31, 2013, they also reported income of 450,000. So assuming the treasury stock is being accounted for under the cost method, what should it report as total stockholders' equity on December 31 balance sheet, right? December 31, 2013. So let's see here. So we have a continuation here telling us this is the activity, right? And this is the picture as of 12/31/2012. So let's see here. So going to the Excel, at year end 2012, we have 1,450,000, right? And now, how many shares did we acquire? So first thing we did was reacquired some shares. So we're saying 3,000 at 28. So that's 3,000 times 28. I'm going to do minus 1. And then we had 3,000 at 35. So 3,000 at 35. Okay. And then we sold shares back into the market at 30, and this is selling it back, and there was 1,800 shares. Now the idea is we also had a net income. So what do you do with net income? We do have an income in 2013, so that was 450,000, something that we have to add. So the idea is, what is the lesson here is that we're really looking, first of all, that equity starting out. What is equity made of? The idea here is that equity is comprised of your issued and outstanding shares, which is your common, par value, is your paid in capital. This is 250,000 in this case. And this is just whatever is out there in excess of your par. Now keep in mind, retained earnings also go into this computation, because retained earnings is accumulated income from all the years up until 2012. So these also in your equity. So that's why I'm starting with 1,450,000. It's my total equity. Now with this activity of acquiring shares, that's something about treasury shares in general. When we acquire, we minus. So we acquired 3,000 shares, so we minus 84,000. We acquire another 3,000 shares, but at a different price, so we minus 105,000. Now when we sell treasury shares back into the market, now we add $54,000 in because we got money. And the income for the year, the total net income, is 450,000. So I'm getting this total updated equity here as 1,765,000. So it's 1,765,000. So going back to the question, the answer is A.